Welcome to another episode of Beyond the Mortgage. I'm your host, Tracy Valko, and I'm excited for today's guest, my friend Derek Serra, who is the president of Westboro Mortgage Corporation. He brings over 25 years of experience in the retail banking sector as well as the mortgage lending. They have funded over 1,000 units and have under growth management asset over $100 million in less than 2 years. I'm excited for Derek to be here today. Let's dive into Derek's expertise and vision. Well, I'm here today with Derek Serra, a great friend of mine and president of Westboro Mortgage Corporation. Derek, thank you so much for coming today. I know you and I have a ton to talk about, but you were also coming from up north, so it means a lot to me that you took the drive this morning.
Oh, always time for you, Tracy, and thanks so much. And what a cool space we're in here today.
It is, eh? Yeah. It's great. Yeah, very good. So we've got a lot to talk about, but first, I think one of the biggest things that I want to get into is because when I say the name Westboro Mortgage Investment Corporation, a lot of people in the community really don't understand what in the terminology we use as a MIC, what that is. What I find when I'm speaking to clients over the years, they think of private lending as an individual that lends out money, which we know we still have in the private space. But a MIC is much different. So I thought, you know what, I'll go to the expert since you've got one. Let's talk about diving in what that is and what that brings to the community on lending.
Yeah, I think it's a great question, and it's also a great topic in that, I just read this morning on one of our mortgage emails that we get with updates that the private lending space is, in terms of growth, outpacing some of the growth in the banks. So the last few years has really been kind of private lending time in the sun. Mm-hmm. And so understanding the difference between a private lender, a syndicated lender, or a MIC is very important. And ultimately, private lender is just as simple as you said it. Your neighbor lends you money. The syndicated side is the same premise, but it's multiple people putting money in to one individual deal. And then you have a MIC. And so a MIC, the way we're set up is we have investor dollars that come in, and we lend out that investor dollars. That would be the basic way to look at a MIC. Mm-hmm. When you get into a MIC the size of Westboro, we also have access to a line of credit through a syndicated bank solution. So we have a few banks who have decided that they were worthy of having access to this kind of capital, so we can borrow their money to lend out. And that speaks volumes for any MIC that has access to that, because it speaks to the fact that the banks are kind of watching what we're doing and have confidence that we are delivering on what we say we will do. Same responsibility you have for your investors. Like when your investors invest in a MIC, you're suggesting to them, this is the box that we play in. And then it's up to people like me to make sure that we stay within that box and make sure that we're meeting all the requirements. So in some MICs, it would just be of your investors, but with a MIC like Westboro, it's our investors and our bankers.
Mm-hmm. And I think one of the biggest things that I tell clients, and my team does as well, is with MICs, they are more secure in the sense of when we're placing a client in this type of mortgage product, there's not the risk of, the mortgage being called during, 6 months of maybe a 1-year term because of the investors wanting to have access to their funds, where when you're dealing with an individual private, you could at any point have that loan pulled, right? Because again, they don't have the liquidity or the strength that a mortgage investment corporation has.
Absolutely.
Yeah.
Even on day one, like when you're getting a mortgage, like we have money that we have on standby. So if you needed a mortgage to fund within 2 days, we could do that because we have money on standby. Yeah. Whereas if it's an individual or a syndicated, you might have to go to someone and say, hey, I have this opportunity. Would you be interested in investing in it? And that could take some time by the time the investor does their diligence. The investor diligence in a MIC is in the MIC, not in the individual deals. And so, size and scale help big time. And so we're a MIC of just under $500 million. We have hundreds of millions of dollars of investor capital that trust us with their funds, and we've been in play for over 20 years. And so it's a place where investors can trust what we do, and equally important, clients can trust what we do. And I wouldn't say, no different than with mortgage brokers, we could go on about that. Not all mortgage brokers are created equally. There aren't that many Tracy Valkos in the planet. Private lenders and MICs are also not all created equally. And so when you have bigger ones, that size and scale allow us to be able to, if we had an investor who wanted their money back, we have a 30-day redemption policy where others could have 6-month, 1-year policies where if you've invested in the MIC, you cannot have access to your capital right away. But that's the kind of flow that we have at Westboro. It can run a little bit, I don't want to say it runs like a bank, but kind of in that regard, where if you needed your money back, you can have it within 30 days. And so just kind of provides comfort and security for investors to know, and for your clients who eventually become our clients to know that they're dealing with a lender that they can trust with their private financing needs, generally short-term by nature, but certainly, what you had suggested in terms of calling the mortgage, unfortunately, we're bailing people out of a lot of those situations.
Yes.
On the way here today, I was on a call with a client who's in the midst of building a home, and they were using a bank to start and a private lender in second. And the private lender is now saying, I want my money back. The build's taking too long. And now they're coming to us to say, can you help us? And we will. But it's just not a scenario that ever happens at Westboro, because we understand in construction in particular how long it takes. But in general, we're just not calling because we have such a large base that we don't need money to come in to be able to lend it out again. Or the smaller mix, unfortunately, would, and in some cases should.
So let's talk about clients, because a lot of the listeners don't understand the dynamics of a MIC. When do they get access to it? Why do they get access to it? Are you consumer direct or are you broker direct faced?
Broker direct, 100%. The broker, and you're one of our great and valued brokers. Your team is as well. We expect for you to do the diligence in terms of the KYC, to know your client, and we expect you to make sure that there's a suitability as it relates to the client, and an understanding really that it's short-term by nature, and given that it's private, it is a little more expensive than an alternative solution. And so, we look to our brokers to not only kind of work with the client on the way in, but ideally help with the exit. And so always 100% broker driven.
And I love the fact that you talk about exit, because I think it's so important when as I'm in the mortgage broker space with our team, we always look at when you're placing a client in a private lending scenario, that there is an exit strategy, and what is that exit strategy, and preparing that synopsis for your company so that you know that we're doing our due diligence. So let's really dial that back down, because a lot of listeners, again, still, now they can understand what the concept of a MIC is, but does that actual lending have to take place? And let's talk about just a couple of scenarios where that would take place, because we could have some listeners that might be in need of something like this and don't know where to go. And again, dealing with a mortgage broker, why I went into this space over 26 years ago is because I wanted to make sure that, clients and potential homeowners, existing homeowners, had options and choices, because everybody's scenario and financing isn't the same as the next. So I thought, why don't I go to the expert here, yourself, Derek? Why don't you break down a scenario of when a client would actually be able to use a MIC?
I can't stress enough that when you're in the world of the simple A space, the advice that you get from a broker is important. But when you slide outside of the A space, the broker you're dealing with and the advice that you get as it relates to not just the one transaction, but potentially the 2 or 3 transactions that may have to happen is so important. And so that's why we're dedicated to the broker community. An example would be, a simple example would be that a client's bought a home and hasn't sold their existing home just yet. And unfortunately, a bank will not really consider what's called bridge financing, which means they're going to give you the equity in your property to help you buy the new property until you have a firm sale on your existing property. And how that gets a little more complicated in this environment is it's tough to know what the properties are going to sell for these days.
Absolutely.
And it's tough to come up with comparables, because ultimately, as much as I know, many consumers or clients will love their home and they'll show you this is the hardwood floor that we put in and this is the special windows that we put in. Ultimately, the value that is derived from an appraisal comes predominantly from the comparable sales in your local market. And if there aren't many, it impacts potentially the appraised value of your home and potentially the sale value of your home. So if you haven't sold and you've bought and you've gone firm, in some cases, the short-term solution would be coming to a MIC where we would allow you to bridge that money, allow you to buy your home, in some cases, 100% financed by us. And we would then kind of cross-collateralize your existing home. And then once your existing home sells, you pay us out, and someone like Tracy would then move you to an A or an alt lender at that time. So it's kind of in the moment, very kind of short term and by nature. We get in to help with the situation and we get out. Another quick one would be, we see so many people, like I don't want to date myself too much. You said 26 years. I'm right about the same. But I think back to my days when I was a banker, and the majority of our clients just kind of had like it was a family, and they both had T4 incomes, and it was only really kind of wealthier individuals that had multiple properties or rental properties back in the day. And now it seems like everyone over the last 10 or 15 years has looked to real estate as, part of their investment strategy, as part of their retirement strategy. And they own sometimes one, sometimes multiple rental properties. And if by chance at the time you're looking to borrow money, if one of your rental properties is vacant, most banks will say, I need to see the leases. I need to know that the money is transacting. In a private scenario, we may just kind of take a step back and look at the strength of the client versus the strength of the one individual part of their overall kind of portfolio. And we might be able to lend them money in the meantime until it's tenanted again, and then they could wind up getting it tenanted again. So it's not always kind of clients in the private space that have, poor credit or tough troubles. In June, I was just looking at our June numbers. The average beacon for credit rating for a client that funded at Westboro was 712.
Wow.
Yeah. And so credit's not the issue. It's almost always complexity as it relates to the individual situation, like a few that I just kind of mentioned. So.
And you're right, because when I look at it and the amount of clients that we're having come to us to talk to us, they're really not fitting in that traditional bank or, financial spectrum right now of being able to qualify. People have multiple jobs, not necessarily permanent full-time, like traditionally, the 25 years. I will date myself because, that's what it was. It was either, you're permanent full-time or you're on contract, and it was very, separated or self-employed. It's not like that anymore. There's multiple layers. People are getting money through being an influencer online, and the banks haven't adjusted, I found, to a lot of new ways of income. So people will have great credit and have good income, or good income and also great assets, but they're not falling in that traditional banking qualification. So I agree with you, and I think the private space, and you'll probably attest to this as well, will be a large part of the Canadian financing spectrum over the next few years.
Absolutely. I don't think things are getting less complicated.
Yeah, I agree.
And then you've got, the intergenerational transfer of wealth, and so you have the baby boomers who were going to be retiring, and some are, and then some have kind of re-entered the workforce because their property values weren't what they thought they'd be when they planned out their retirements, and or they're bored. Some folks are just saying, I want to get back to work, and so again, when you're working and you're looking to borrow money, the complexities around the income qualification are a lot more than common sense lending. And the nice thing about private lending is there is a strong degree of commonsensical review, and so that helps. But the situations are just kind of way more robust than they've ever been in past, for sure.
And I think it'll just get more complicated, and why we've got companies like yours that are able to help us through it. I want to kind of divert from this right now, and we'll circle back because I have a lot of questions for you before the end of the podcast. But I want to circle back to you personally and your journey, because I know it just didn't start with Westboro as being the president. You have a long history of being in the retail banking space for 25 years. You were with RBC and then a company called XMC as well. So let's talk about even before that. How did you even get into the banking space?
Yeah, I started, I was in university, and I started as a part-time teller at RBC in Bowmanville, Ontario. And I didn't really at the time plan on being a banker. I was going down the path of doing a degree in English, believe it or not. And it just wound up being a place that I really kind of enjoyed working. And my goodness, times have changed. Like, we'll go back now to the days when you're standing at your wicket and someone walks up and they're smoking and they're ashing and part of your job is to keep the ashtray clean, and they're smoking. And people laugh at how long we've been around, but I also would say, and people look at me and they're like, "You're kidding me?" Like, when I started at the bank, there was no email.
Me too.
Right?
No.
It was called CC mail back then. There were no cell phones. Like, the only person who had a mobile phone was the mortgage specialist. Yeah. And it was kind of it was like the size of this cup back then. And it was so cool because you could call her in her car, but it was very unique to have somebody who you could access without them actually coming in. And moving through the bank when I became kind of like a banker and did all my accreditations and whatnot, that's when I really started to fall in love with the mortgage business. And many of the mortgage specialists from back then are mortgage brokers now, still friends, and send their private business to Westboro. And we almost laugh every time they email saying, "My goodness, it's still me after all these years." But it used to start at, you'd get in at 8:30 in the morning, and the mortgage specialist would be at the door, and they'd have a pile of files, and they'd walk you through, okay, these are the 9 files we're working on today. And then my job was to take all this information and input it into the system. And then you would have to do photocopies of everything, and then you'd have to fax, and you'd stand at the fax machine because you'd have this pile of information like this that had to go into credit, and you'd be waiting. And then you'd have to wait, and you'd have to press the button to get the confirmation that the fax went through, and then the big stapler to put it back all together. And so, it's when you've got that kind of experience in the business, you've seen a lot. And it's funny the way it's amazing still, like how that worked back then with no email and
and it worked.
And it worked.
It
and
did.
Somehow, and the folks who were around back then, like yourself, like there's a lot of value to talking to people who have got that kind of experience in this business. And so, from there, I wound up, doing all my accreditations through the bank, which is very important. And I still, to this day, get people who ask me about career advice once in a while. And, I generally say to them, pick a lane. And so there was a time, when I was a VP at the bank, I had groups of people that reported to me, and a big part of my job was providing, career advice and counsel and guidance and things like and mentorship. And back then it seemed to be very much more about being a generalist. So, you're going to work in the visa department, then you're going to work in financial planning, and then you're going to work in commercial, and we're going to make, you're really going to have a good, deep understanding of the bank. But I think that people who really excelled, very few people excelled by doing that. The people who did really well, they said, you know what, I really like mortgages, and I'm going to become a mortgage specialist. And then eventually, as time went on, most of them left and became mortgage brokers. I really like investments, and I'm going to get my financial planning designations, and I am going to do all the work that's required so I can really provide great advice in financial planning, and stayed in that lane. And, the other big lane at the time was commercial. And so learning how to deal with commercial financing, and again, all of the courses and accreditation that is required to do that. And I would never underestimate how long it takes to do all of the courses and get all of the accreditations that are required, in particular in the financial planning world, because I spent a time overseeing kind of a financial planning division within Toronto. And that's a key ingredient to that. Like you can't just want to all of a sudden one day decide I'm going to pick a career path in investments without acknowledging it could be years of some of the accreditation that are required. And so, through that process, I ended up being a sales manager for mortgage specialists, and that's when I just fell in love with the whole setup. And I'm sure some of them will be listening to this today, and they always kind of say that I was a tough guy to work for back then. And but the kicker to that is always that they never made more money than they did when I was their boss. And so it was just one of those things where I was and I am today still very diligent as it relates to the client experience and kind of constantly talking about, get back to all your clients, get back to all your partners, acknowledge, that as much as when you're working at the bank, you're not an entrepreneur, but that 100% commissioned role is very entrepreneurial by nature. And I then got a chance to take over as the vice president of the mortgage specialists. So I spent some time in the branch network, which kind of rounded out my career, because as the vice president in the branch network, you get to oversee small business, financial planning, and it was 15 or 16 branches back then. And it's even funny, like this isn't that long ago, but back then the goal was to open as many branches as possible.
Wow.
And I always, I had so many exciting opportunities that were presented. I loved my time at the bank, where we could spend time even with clients. And so it was those rooms where it's kind of glass and the clients are being, they're having a conversation with a moderator, and we're sitting outside and listening to what they have to say. And you'd hear all the great kind of feedback about, why do bankers, quote unquote, why do the bank make so much money, and what is the right investment that I should be selecting, and who should I look to get mortgage advice? So when you hear all that from the lens of the client, it's so powerful. And the bank does such a good job of taking that away and coming up with a way to kind of work through it. And it was really kind of this evolution of going from the bricks and mortar banks to digitizing and being able to connect with clients more so online than ever, and trying and obviously the key ingredient to that is connecting somehow through their phone, so that you have your digital app and you can do all the things through your phone. But I mean, it's amazing to see from the fax machines and the staplers of 25 years ago to now.
It's an incredible journey.
You press a button on your phone and you can,
Get
apply for a
access.
mortgage.
It's amazing. What made you make the transition from the bank over to the independent mortgage space?
Yeah, and so my journey was one where I grew up in the bank, and I mean, I think a lot of the senior folks they come in from other places, or they're senior and they don't necessarily have that kind of grassroots career the way I did. So there was a time when many of my friends, who are many of your colleagues now, were saying, we would get our top people together and we'd get them out to wonderful kind of top producer conferences in Laguna Beach and Miami and great places. And you spend kind of 3 or 4 days with people and you get to know them very personally, and they tell you. And it was always very positive until it wasn't. And it became this shift where many of the top producing mortgage specialists were saying, we need more tools in our toolbox. This isn't enough. And we want to be able to have our own marketing plans, and we want to be able to expand our assistant base, and we're just not fitting into the structure of the bank's mortgage specialist business anymore. And so I kept hearing that, and I kept saying, like, geez, I think we're at risk here. I think that these top people are going to leave, and if and when they do, they are not replaceable. When you find the top 1 or 2% of people, you just cannot replace those people. Not their caring, not their capacity, not their ability to relationship build. And I think that, at the time, the bank was, and the one thing about RBC or any of the big banks is they're very good at what they do. And I think that they were reading the tea leaves as it relates to a more digital kind of interface with clients. And I don't think that they were okay with people leaving, but I think that it was understood that if this is going to be the journey that people want to take, then it is what it is. And, I kind of wasn't okay with that. It was one of the first times in my life where I was like, I always saw the future through the eyes of the bank. And at that point, I didn't. And so, we parted ways with me kind of saying, I don't like the change that's coming. And so it was a big change for me personally.
Yeah.
Because the bank was my kind of like, it was not just my career, it was my identity.
Yeah.
And I had, I had been very successful throughout my career, having won like the Leo Award, which was like the 1% of the 1% and all the rest of it. But, it's funny, Tracy, when you take a step back, you realize kind of that the journey was one of learning and education. And it's amazing how much you've learned in that time and the transferable skills that you have that you can bring elsewhere. Mm-hmm. And so, shortly after I left, I was approached by the team at XMC, which was owned by a company that was called MCAN, and they're still very much around. But the CEO at the time was also an ex-RBC executive, and he also on his leadership team had 3 other ex-RBC folks. Mm-hmm. So they knew who I was, and I kind of knew who they were. And they came to me and they said, look, we're expanding out this brand that we've bought. It's an A and an alternative lender, and we'd like to see it grow. And I kind of at the time said like, oh my God, I don't know if I can do this. And they said, Derek, look, it's based on the Rolodex you have and based on the amount of people who are leaving the bank, they're going to be looking for lenders, and they're going to know you, and that's a big part of that kind of connection. And so, that kind of started XMC, which started with kind of say 50 or 60 million in sales in the first year to over 2 billion in the third year.
Oh, it was incredible. I remember that. Yeah.
Yeah, it was a great run, and the interest you start to learn. When you're at the bank, it's so big that you don't necessarily have that entrepreneurial hat on to the degree that you do when you get into the smaller companies. And so what I learned very quickly at the smaller lender was the brokers don't work for you. Whereas at the bank, the mortgage specialist team reported in. So you could kind of lay the framework of what you wanted to have happen, and people would do it. But with brokers, it's like, this is what we offer. And they say, okay, great. And then no business comes in. And you're like, well, what do I do now? I mean, they said yes, they said great, there's no business coming in. And so what I learned was on the A side in particular, when it's an insured lender, you're not going to grow your business in the GTA, because back then it was up to $1 million that you could buy a house and have a mortgage on. I think now it's 1.2 or
it's 1.5.
1.5. Yeah. So, but then it was $1 million, and so you're not buying houses say 5-6 years ago in Toronto with 10% down at $1 million. So I wound up having to kind of get outside of the city, and so I'm spending time in London, in Waterloo, and in Ottawa, and XMC hit first in Ottawa. Just some good relationships with, again, some ex-bankers that were out there who we went back a long way, and business started coming. And so the more business that was coming from Ottawa, the more time I was spending in Ottawa. And that's how I came across Westboro.
Oh, okay.
Yeah.
Very interesting.
So Westboro, so for those who don't know, Ottawa has many different little towns within the city of Ottawa. And one of the boroughs is actually called Westboro. So that's where our office is.
Oh, that's where the name comes from.
That's where the name comes from. Yeah. And so if you were in Toronto, if it was called Rosedale Mick, it would make sense. Yeah. It's a borough within Toronto. And so Westboro was where the previous owner lived and had the business. And so that's why it's called that. And so as I was spending more and more time in Ottawa, I came across Westboro. And Westboro was going through a transition of kind of from a family-owned business that they were very good at and very successful, but it was kind of time to retire. So the company got sold into a capital corporation, and the capital corporation then was looking for a president. And so that's my weird journey that got me to Ottawa.
Yeah.
And now I spend, a fair amount of time in Ottawa, and I love it. And it's a great place that I kind of call my second home.
And I love the fact that because you are president, you hold many hats as a leader for the company, but we can still call and you'll pick up the phone. And I think that's the humility and the grace that you have. because you still keep the core values of being connected to the people. I know that's a big part of your mission, is to make sure that you build that strong relationship with the mortgage broker industry. And again, it's not just about getting business, it's about just building that relationship and understanding of how people like us as entrepreneurs are able to build our mortgage broker business. I want to actually dive even deeper into your family. Were your parents in banking?
No.
No? Okay.
No, my parents were, so I'm Italian, and so
Okay.
my parents were born in Italy, but moved here when they were very young. So it's not that they have accents, but just based on how much food they're going to try to give you when you meet them, you'll know they're European anyways. But no, neither one were bankers. It just happened to kind of fall in my path, that kind of honestly and sincerely. But what I loved about the banking side, and which really always resonated with me, was kind of like delivering a great client experience.
Yeah.
So there was a time there where the bank really kind of focused on the client experience, and there was all the ratings and data that were coming in, and it wasn't just about the business. It was about making sure that every client who came into every branch had a great client experience. Something about that for me just resonated, and while we were always doing well with business, one of my little claims to fame was, I was a branch manager in Scarborough, and we were the #1 branch in Canada for client loyalty for like 2 years in a row. And, when you think about some of the small communities like in Halifax or small communities in Victoria, BC, like where it's the same people who come in the branch every day, like how is this big branch in Scarborough able to generate that kind of level of client experience when you're dealing with, people who are speaking different languages and coming from different backgrounds. Scarborough is very diverse and multicultural, which I loved about it. And so, it always fascinated me. It always fascinated me how I could deliver a great client experience. And that has always resonated. And so I think it's always been part of the brands that I've worked at as well. And it's a big part of working at Westboro. And, it's not something I preach. It's something I really believe. And that's why you'll never go very long without getting an email back from me or a call right back or a text. And I mean, you're exactly the same. I text you text me back within 5 minutes almost always.
Well,
I don't know how you find the time. Yeah,
it's banking. And I think it's like your journey is, again, different hats that we have, but very similar, because I was on the banking side and then I was in the alternative space because I was with household finance and did mortgage collections. But I learned so many pivotal moments of education, purpose, and like the work I do now. And the client experience was always like something that was really ingrained, but I deeply felt that was such a core value for me to be able to provide that experience. And that's why I think you and I connect so much on that level, because the experience that you bring is very similar. Who's your biggest mentor over the years?
A great question. There were a couple along the way. One of them was a really tough kind of boss I had, but she always kind of, she always made me think about kind of like, in some cases, the best response is no response. It's to take some time to think.
Yeah.
And so when you move through an organization like one of the big banks fairly quickly, you all of a sudden end up in a room of some very educated and sophisticated people. And just because you're really kind of passionate about what you do, that's not always enough. Like you've got to have the savvy, you've got to understand kind of the culture and the professionalism that's required to be a senior leader. And so, one was someone who brought me through that world. Another, his name's Doug Crow, and Doug Crow just retired from RBC recently.
Okay.
After I think 35 years or so. And so shout out to Doug. Most of the brokers on here will remember Doug because Doug headed up the mortgage specialist team for many years. And Doug always had great perspective. And we've kept in touch throughout my career, even after I left. And just a really wise individual. And I'd say with Doug, it's always the question about not what, but why and how, and think about it. And so some great mentors, very lucky to have had that experience. And the other interesting thing about being focused on the client experience at a bank or in banking or in financial services, because the client experience, if you're working in any other industry, might just really be about speed and efficiency and candor and all the rest of it. But when you bring it into the financial services world, it becomes about advice. And so you cannot have a great client experience if you give people the wrong advice.
Exactly.
And so it becomes about education and sophistication and all those kind of things. And that's why to achieve a great client experience in the mortgage broker space, you have to be good at what you do. You can't just pick up the phone when they call. You can't just quickly get back to them. They're going to ask you some tough questions. And if you don't have those answers, your smile's just not enough in this space. And so I think that client experience piece, and I think, Tracy, that I agree with you that that's where you and I kind of see eye to eye on those things, that it takes a lot of experience and it takes a lot of kind of caring and also the consistent need to get better.
Yeah.
Like you're always evolving your brand, what you're doing, what you're all about, and you're learning. And that always interests me, people who, it's never enough as it relates to their journey and of learning and always trying to get better. And I think those things all come together and you have a good person and a good brand and generally a following as well of people who kind of see that in people and say, you know what? This is someone I know, like, and trust. That's one of the things I always kind of talk about.
Well, you're that person, my friend, because in our industry, everybody knows, loves you, and respects you. And I think that's why Westboro has grown so much. And the rapid growth that you've had at Westboro is really a testament to your leadership. I want to dive into financial literacy because a lot of the podcasts, I talk about this. And why originally I actually started the podcast was about talking about financial education and people's journeys with money and lessons learned. And you've been full spectrum. You've been on the banking side, which is, again, structured banking. And, this is where people open up their first bank accounts, right? And they learn about what a savings account is or being able to get a credit card. And then you've been on you're on the other end of this where, it's evolved. It used to be that space where people had, I always say credit challenges, right? Lessons learned in money and being able to go into a product that gives them a temporary fix for a solution that's going to help them get better down the road. And now, that private space is now a place where people have to place their money because of complexity of income and where we're at with the economy. With everything that you've seen, what do you think some of the biggest lessons on financial literacy is, and I'm going to say for this country, because I do think it's different in other aspects across the globe where people's mindsets are. What do you think the lessons learned and the journey's been with financial literacy in Canada?
It's a great question, and it's evolved so dramatically.
Yeah.
Like, because even if you go back, I don't know that 20 years is that long ago, but if you go back like to the time when most people got a job and the job came with a pension or and the pension was a defined benefit pension versus a defined contribution pension. And not to get into all the details, but those are two really different things. And you won't find a job ever again where they give you a defined benefit pension. And so, when you get those when you used to get those jobs, so long as you worked to a certain date, you knew that once I retire, my defined benefit is going to be X amount per month. And almost investing otherwise wasn't as big of an issue. And so then the defined benefit shifted to defined contribution, which kept people staying in their places of employment longer. But little by little, that whole world is dissipated. And the more Canadians who are becoming self-employed, the more advice that they need, because obviously none of that matters when you're self-employed. What starts to matter is tax and how can you kind of be most tax efficient, and insurance and making sure that your families are looked out for and protected. And so in all of those components, like as the world has shifted to more of a self-employed economy and or places where people have 3 different jobs, and it's not like they work 3 different full-time jobs. They might have 3 different little things that they do, but their ultimate income is quite good and very tax efficient. But the amount of advice that has to go into that is way more than it ever used to be. Like you can't just kind of say, okay, I make $100,000 a year. I have my defined benefit pension, which leaves me just a small amount to make an RSP contribution. I make my RSP contribution. I pick a balanced fund, and we're good. It doesn't work like that anymore. And so one of the things that people kind of started doing, I would say, kind of 15 years ago, so 2010, 2008, 2009 is buying condos. So the average kind of client said, you know what? I think the best thing to do is own a lot of real estate, and I'm going to have investment properties, and I'm going to buy condos, and so what I've seen is people, they bought a condo in 2007, 2008, and by 2013 or so, it was done. And if they bought it for 300, it was then worth 500, and they're like, this is the best thing ever. Now I'm going to buy another one. So in 2013, they bought another one. And they sold the other one, or they kept it as a rental property. But back then it carried as well, because if you bought it for 300, you have a mortgage on it for 2 something. That $2,000 a month is going to cover property taxes, mortgage, all the rest of it. Condo fees, all of it. You're good. But when you flipped it in 2013 and now you're into 2018, maybe you had another good win. And then in 2020, 2021 or so, that's where people are saying, you know what, maybe I'm going to buy 2 this time, or I'm going to buy one, and I'm going to buy another one with my brother-in-law, or another one with someone else. And then all of a sudden, this kind of condo crisis has kicked in. And so people were looking to real estate to kind of support their, financial literacy, retirement journey, to supplement cash flow, to potentially buy condos that eventually would be paid off as gifts to their kids, or if they're buying them near the universities that their kids could eventually use if and when they have to go to school. Variety of reasons. But real estate became a bigger portion of clients' kind of overall investment strategy than a place to live. And I don't think anyone was expecting what just came. And I do see a path out of it. I think at some point there will be more of a regular environment around condos for a variety of reasons. But right now, there are people who have bought for $1 million, $1.2 million, and now appraisals coming in significantly lower, and they're having to close on these condos, which could in some cases erode all of the profit they made over the last 10 years of doing these little flips. And so, I think it's one of the things you read about now so much is all of this judgment on the condo market. But I don't think people always kind of take a step back and say most people who have been in that world have been making a lot of money doing it for a long time, or have built themselves a really nice investment portfolio. Yeah. And as long as, you can rent it out, you're kind of okay. But the rental market has also become tough. So that's one of the key pieces, I think, that I've seen as a major shift as it relates to real estate in terms of financial literacy, that I think people just always assumed this was going to be a good idea. Yeah. And I think that in time it will be, but like any investment that is sold, how old you are and how long you have to hold your investment are key questions to decide whether or not you make that investment. And I think by the third condo purchase, people lost sight of that. And back to kind of the private lending space, this is where we kick in, because if you have 4 condos that you bought over the years, and one of them's joint with your spouse, and another one's joint with your brother-in-law, and then another one's joint with your mother, like it's kind of hard to put all that together and say, okay, you qualify for a mortgage. But on the private space, we look more so at the real estate, less so about exactly the cash flow that's required. And if it rents and it carries, we're generally okay. So I'd say that would be one of the bigger shifts in terms of major changes. And I'm not sure how long it's going to take before it regulates right now.
That was going to be one of my questions, is what you think about that, like what the future is. I've been reading a lot. I'm always educating every day on, what people's expert opinions on the economy and where the future is going to go. And kind of going back to this financial literacy, there's a lot of comments about how Canadians are irresponsible with financing, and specifically, over these last, I would say 4 years. I wouldn't call, to me, like my opinion is I wouldn't call it being irresponsible. I think that we're a country that, I grew up in Canada, and in the schooling system, we never talked about what a savings account was, how to be able to open up a bank account, what you do with your first paycheck when you start working. I started working at 14 years old. I don't see that has changed over the last 3 decades. It's maybe moved a little bit, but it hasn't moved the whole needle. When you look at other countries, and I've done some in-depth search on it, where they've really been fiscally responsible on educating children at a very young age on the asset and the importance and the respect of money, it's a game changer. And do you feel, in your opinion, that that's what's been lacking in our country, is that expert knowledge an education at a young age, because no matter what happens in the economy, real estate can go up and down, and you and I can attest to this. It's a long game. So you can't bank on real estate to be able to grow wealth, but I think Canadians have. And I think that it's done a disservice to some extent, and why we're here today, because people haven't understood how to invest money or how to save. And I don't blame people, and that's why I do a lot of what I do, because I don't hold judgment in it. But I think it's why, as Canadians, we're hurting so much.
Yeah, so from an advice perspective and an education, I totally agree. And I think that's always been an issue, and I'm not sure how it shifts. It's a bigger shift that has to take place in terms of the education system to kind of acknowledge even just something simple like, when you get your first credit card, how important the beacon score is that you are going to kind of create. And if you don't take care of your credit score, and then all of a sudden, you meet your significant other and you want to buy a house, and you all of a sudden have to say to them, I haven't really been paying my bills on time. Like, that starts to speak to character. And if you can't buy your house with someone because they've been sloppy with their credit, because they didn't realize how important it was to make even minimum payments, they might look at a minimum payment and say, it's only $10. I don't have to make that payment. It's not a big deal. It actually is a huge deal.
It is.
And so that's one key ingredient. The other piece, I think that I don't know that you can plan for what happened during COVID, but I think people will after it happened. And it's one of those things where, I can always remember my mother saying, wait for the stove to cool off before you touch it. And you only have to touch it once, and you'll never forget to wait for the stove to cool off before you touch it. And so in this case, like, the long-lasting impact of all of the shutdowns through COVID it's going to take years for people to kind of get back into the kind of financial security. And little examples would be even just catching up for people who decided, you know what, I'm not sure what's going to happen with my business. I'm in retail. I can't even open my doors because people can't come in, and it was an extended period. They may be behind on their property taxes personally because they said, I'm not going to pay my property taxes. I'm going to
pay my staff.
I'm going to pay my staff or put food on the table for my family. And you don't just all of a sudden have a good year and correct all these things, right? Or I might have to draw on the money that I had saved for my kids' education because I need money right now. And so I think that everything that happened through COVID, it just continues to amplify what you're talking about, which is people need to kind of be educated and prepared for what will happen on the day-to-day, but what could also happen dramatically if something significant changes. I'm hoping that we never have to live through something like that again.
No.
But you could argue that COVID, could be someone who's going through some kind of illness. Like, we see that on the private side a lot. Someone gets an entrepreneur who gets sick. They cannot generate the income they had. They're not necessarily planned as well as they could or should have been in terms of insurances. And now they need private financing because they can't show the income they were showing before. And it's a short-term solution until they get,
back on track. Yeah.
But again, these little troughs happen in people's lives, whether it's health related or business related, or as it relates to COVID, macro kind of economy related. But all of those things matter. And even now, like with what's happening between Canada and the United States and all of this discussion of tariffs, like, being a lender in Ontario, you have to be really kind of cognizant that the automotive sector is a huge part of the industry. And having grown up in Oshawa, like, I know about people who work at General Motors, right?
Exactly.
When I was a kid, everyone worked at General Motors practically. And if you didn't work there, that money that came from General Motors kind of supported the local grocery store or the local, all businesses. So when you're looking at kind of tariffs as it relates to the automotive sector and a potential slowdown in car sales, and then the need for car manufacturing, that's a lot of jobs that could get impacted. And so people kind of have to be prepared financially for things that could change in their future. And so having the right kind of conversation with a mortgage broker in terms of amortizations, in terms of not being in a mortgage where the only way out is to sell your house, things like that. Like, if you've made poor decisions without the right advice, it'll almost always at some point, it'll amplify, its poor decision at some point down the road.
So where do you envision home ownership and real estate in the next 5 years?
Yeah, it's funny because when you take a step back from Toronto and you look at the other big cities, like, no one lives in a home in New York. Like, no one lives in a home in Tokyo. No one lives in a home in London. Everyone lives in condos. That's just the reality. And I still kind of feel like the Toronto market, and then even kind of a little bit outside of Toronto, people still see condos as, oh, you live in a condo. Like, it's like, of course I live in a condo. I live in the city. Like, where else am I going to live? I'm not going to live in a house. So and that's where I still think that condos are being built now. I certainly don't think there's as many cranes in the sky today as there were 5 years ago, but I still think that we're going to see condos become a bigger part of society than people think. And part of that is just having access to all the different public transit availabilities that you have. I remember when I worked downtown, and I worked with this lady, and I kind of just said to her, boy, you've worked here a long time. Like, why? Kind of one of my thought-provoking, like, why questions. And she's like, Derek, I got to be honest, I don't own a winter coat. And I'm like, what are you talking about? She's like, I live in North York, and I live in a building that has the subway that comes underneath, and I take the subway down, and I get out of the subway station, and where we work is within the subway station. So I just get in the elevator and come up, and I'm in the office.
Wow.
So, that, and she didn't own a car, and she didn't want to own a car.
Yeah.
And so if the world continues to evolve away from kind of like you get in your car and you drive to work every day, and you want to live more of a life where you can have access to the city and all the great parts of living in the city, then a condo is really going to be the solution. So I think that we're in a blip right now as it relates to the one thing I never really understood were these really kind of small micro condos, like these 300 and 400 square foot condos. That I think is going to have been a little blip in the world of condo building, because I think that we'll start to see them go back to like 600 or 700 or 800 square foot condos. The issue, obviously, in building the bigger condos is the sticker price that comes along with it, and they get to be the point where they're too expensive. Yeah. But it's also kind of hard, to live. I get it. I get the idea of having a 300 or 400 square foot condo, but living in it regularly, I think it's a little small in the micro size, and I think those kind of have not been as well kind of received or digested in the world. But in terms of home ownership, I tell you, like, as we continue to see Canada be a place where there's immigration, I mean, of all the new immigrants that come to Canada, home ownership is a major priority for them.
Exactly. Yeah.
So as long as we continue to see immigration, and not just immigration of students and short-term workers, but actually people who are going to move to Canada, I would say that in that class of client, like, home ownership's a major priority. And so, back to these kind of non-traditional kind of qualifications, like, we still might see two families buy a home in the suburbs and live in it until they can buy another home and then split off and have, and many cultures outside of Canada are okay with that. And so coming up with how to finance those things is the interesting part of where I think that the industry has to evolve. Same thing with these kind of where people are able to build kind of an additional dwelling unit, an ADU, in their backyards and whatnot. In some cases, it's for rental. In some cases, it's for extended family.
Exactly.
But again, as much as we came out with this idea that now we're going to allow that to happen, I don't think that everyone got their head around, okay, how are we going to finance that? And on the private side, we do, but we do only with the understanding that there can be takeout at some point. And a lot of times in talking to the brokers, they're kind of like, I don't know if one of the banks is actually going to take this out at this high loan to value, so it's all kind of well and good until we talk about actually financing it. So I kind of think home ownership is always going to be a priority. And I think that ultimately, it's the responsibility of the mortgage broker community to continue to educate themselves on the different solutions that are available to clients. And then I'll obviously take that information the way you do and amplify it through your brand out to clients so they can come to you and get the right advice so they can move through the home ownership journey in a way that, helps them be successful in life.
Well, I think one thing that I can take from what a lot of your conversation is that financing is going to continue to be complex, and the need for alternative financing like a mortgage investment corporation like Westboro and a mortgage brokerage industry like the one I'm in is going to be even more essential for home buyers and a lot of people coming into our country too, because income is not the way that it traditionally was. So the need for us and the evolution of AI will support our business, but it won't take over our business. I always say that to people because you still need a person to be able to understand the situation and to be able to complex it down to look at various programs like yours that are out there. So I think personally the mortgage broker space will grow even more, and I think the need for Westboro and companies like yours is going to be so essential to be able to help people with home ownership journeys, because you're the evolution of not it to be the inevitable destination at the end, but the journey of being able to get to the end of owning that house free and clear. And that's so essential and needed. What's your final message for anyone that's listening today? What's one of the most impactful things that you think people should know in today's environment?
I mean, as it relates to getting a mortgage, you have to work with a mortgage broker. You have to work with someone who has experience, who has the accreditation like you do, level 1, level 2 accreditation, so that they've got the education behind them, and also the access to the variety of lenders that only a mortgage broker does. And I think that, being prepared to have that conversation as well, getting your documents ready, getting ready to kind of, disclose all the things to do with what's happening in your personal situation to your mortgage broker, and then giving them that trust and confidence to say, help me. And I think when you're coming across a really good mortgage broker, they will do just that. And they will help you with your short-term needs, your long-term needs. And that key advice can be so important. And, the opposite's also true, that if you're given the wrong advice and you're focused solely on price or solely on rate, that could amplify in the wrong direction. And these real estate kind of mistakes, they're very hard to overcome, whether they be huge penalties that you're kind of putting yourself in the way with, or huge collateral charges that take up equity in your property. There's a variety of things that can happen that you don't even realize that the right kind of advice will shield you from. And so, my advice is 100% work with a mortgage broker, ideally one in your local community who knows kind of where you live and what's happening in that marketplace. And I think that that's a really good step in the right direction for clients who currently have mortgage financing, or clients who are looking to be pre-approved who eventually will be homeowners.
And I think that for a lot of the listeners that are not in the mortgage space, I know we will have a lot looking at this podcast for sure, but the listeners that are not in the mortgage space, I can't thank enough what you and Westboro do. You save so many people's lives on financing. I tell a lot of people financial wellness is so important. It's such a priority for myself and my team, and for a lot of us in this industry. And you help alleviate a lot of people's financial stress and help them have better well-being. And I think in life, that's what it's about, is helping people. So on behalf of myself and everyone in my industry, I want to thank you and Westboro for all that you do. You continue to innovate. You continue to raise the bar in our industry, especially in the private sector. And your Instagram is amazing. You really level it up with a lot of unique stuff that you guys do and make it fun. So I think that's a great way as well. So thank you again, Derek. And for people that want to reach out to you, now a lot of people will be listening, will be on the mortgage space. So if they haven't been dealing with you at Westboro, how do they connect to you or your team?
Yeah, and so obviously the website's there, westboromic.com. But even better would be follow us on Instagram. It's that's another whole kind of podcast and conversation about how we communicate. Long gone are the days of the fax machine and the stapler and all that. But we've leaned into social media as a way to communicate, because I think everyone knows, especially when with us being B2B, people know that we do mortgages. We do private mortgages. So the Instagram is a way to kind of engage in a fun, light-hearted way, but still provide context in terms of what we do and how we do it. And so that's another cool way to follow along with our journey at Westboro. And certainly we have, if you want to email me, I'm happy to kind of take your email and get you into our email distribution list, where we're communicating a lot of the important kind of information as it relates to rates and products that we put out on a regular basis. So, find me. I'm out there to be found. And again, thank you so much for the opportunity to meet with you today and be part of this really cool podcast and this really cool environment.
You're welcome.
And everything you do, Tracy. Like we've partnered on several things in the local market here in Waterloo, and having gone to Laurier, I was kind of a special kind of place in my heart for Waterloo, and so all the things you do for the communities that you serve really resonates with me as well.
So I know you've got a long trip to where you're going and you got to take a drive. So thanks again for your time. And for any of the viewers, if you need to reach out to Derek, we'll have all his information online as well.
Thank you.
And thank you today for joining us in the conversation on Beyond the Mortgage. If you loved today's episode, make sure you click the subscribe button, share it with your network, friends, or family. And until next time, stay connected to your amazing community.